Some Friday cheer for the street with Nifty inching towards 24,300 mark. Outperforming the broader indices, the benchmark is on track to end the week with a percent gain as private banks, real estate and autos and major support, while pharma and metals lackluster.
Wipro slips in trade after missing estimates on margins and profitability, while management says AI spending remains a structural growth opportunity despite patchy discretionary demand. In contrast, we have Tech Mahindra, which is gaining in trade after beating street estimates on revenue, profit and margins, aided by strong deal wins and continued operational improvements.
Due financial gains after reporting strong income growth driven by a one-time dividend from Reliance, while its lending and payment asset management businesses continue to scale. Meanwhile, 360 ONE WAM advanced after delivering double-digit profit growth.
Shares of CEAT come under pressure after first quarter profits slumped as higher raw material and finance costs offset strong revenue growth in the quarter gone by. Meanwhile, WeWork India falls despite narrowing losses, with management remaining confident of sustaining its expansion momentum over the next few years.
NRIL is expected to report a steady first quarter, with profits seen rising 13% on a sequential basis. Supported by a stronger oil-to-chemical business and resilient telecom performance, investors will watch out for management commentary on geo-tariffs and listing details.
JSW Steel is expected to report improved operating margins in the first quarter, supported by higher steel prices and better realizations. However, rising coking coal and iron ore costs are likely to offset some of these realization gains.
All eyes are on the country's biggest lenders as HDFC, ICICI, Axis and Kotak report first quarter earnings tomorrow. While profit growth is expected to remain healthy, investors will closely watch the margins, asset quality, deposit growth and management commentary on the loan demand.
Hello and a warm welcome. You've joined us on Buy Now, Sell Now right here on ET Now. I'm Ashesha Advaryu, with me is Ankita Saxena, and clearly some Friday cheer coming in for Indian equity markets. But this is a show where we answer all your stock-specific queries, so keep sending them to us. The WhatsApp number is flashing for you at the top of your screens. You can send your query, the name of the company, time horizon, your purchase price, purchase quantity, and we'll try and answer as many questions as we can over the course of the next 1 hour. But first up, let's take a look at what the market is doing at this point in time. And Nifty is now holding above that 24,250 mark, 0.7% higher for the Nifty 50 index. We have the Nifty Banking Index that is up a solid 500 points in today's trading session, sustaining well above that 58,000 mark. In terms of individual sectors that are in focus, barring metals and pharma, all other sectoral indices are trading with gains in trade today, and IT clearly continues to support the momentum. Nifty IT index is now up more than 1% in trade today. TCS, for instance, is up 2%. We also have Tech Mahindra, Infosys, HCL Tech, Persistent Systems. All of these IT stocks gaining in excess of 1% in trade today. On the losing side, of course, we have Wipro on the back of margin pressure that we saw in the quarter gone by. That stock is down 1.5%. Coforge also down more than 1% in trade today. Other sectoral losers include pharma, because we are seeing a lot of pressure over here as well. The Nifty Pharma Index, that index is down 1.2% as we speak. Healthcare and a couple of metal stocks are also under pressure. We have Torrent Pharma, that stock is down nearly 4.5% in trade today. Gland Pharma, Ajanta Pharma and Glenmark are a couple of other losers from the Nifty Pharma Index, all of them declining in excess of 2% in trade today. So metals and pharma are on the back burner, but we have IT, which is leading gains in today's trading session. But shifting focus then, India is set to take a major step towards green mobility as Prime Minister Narendra Modi flags off the country's first hydrogen-powered train. Designed and built by the Integral Coach Factory in Chennai, the train will operate on the Jind-Sonipat route and run on a 1200 kilowatt hydrogen fuel cell, emitting only water and vapor and heat. Bhavna Kishore is now joining us with a ground report on this.
Indian Railway is all set to launch country's first hydrogen passenger train, marking a major milestone in India's green mobility journey. We are here at Jind railway station, and here it is India's first hydrogen train. If we talk about this train, unlike conventional train that run on diesel, coal or overhead electricity, this train generates its own electricity using hydrogen fuel cells. The biggest advantage is that it produces only water vapor as emission, making it completely clean and environment-friendly mode of transport. This is also set to become the world's largest, highest capacity hydrogen passenger train with 2 power cars and 8 coaches capable of carrying around 2,600 passengers. If we talk about this train, the train has a maximum design speed of 110 kilometers per hour, while operation on the Jind Sonipat route is in Haryana will begin at 75 km per hour. To support its operation, Indian Railway has built its own country's largest railway hydrogen refueling station at Jind. Safety is also being given top priority. The train is equipped with hydrogen leak detectors, fire and smoke sensors, automatic shutdown system, and real-time monitoring, ensuring safe operation despite hydrogen, a highly flammable fuel. The inaugural service will run between Jind Sonipat junction, covering 89-kilometer route, and halt at 12 station. With its launch, Indian Railway is taking a significant step towards building a cleaner, greener, future-ready transport system, and plans to introduce hydrogen power train on heritage routes like Kalka, Shimla in coming years. And in some time, PM Narendra Modi will be in Haryana, Jind, where he will show green flag to this first country's hydrogen passenger train. With camera person Satyendra Singh, Bhavna Kishore for ET Now.
All right, let's move on and get going with the show. And let me get on board Rupak Dey, who's the senior technical analyst at LKP Securities, who's now joining us on the technicals to get your questions answered. So without further ado, let's get going with the show. Hi, good morning, Rupak, and thank you so much for joining us. The number is flashing on top of your screens, and so is the QR code. You can scan and send in your questions. Let's take the first question coming on WhatsApp. This is from Vijay Kirti, who's writing in from Chennai. She says that she has an MDC. The entry price is 91. She wants to know if she can add more at current levels and hold. She's not given the holding period, but Rupak, is this the right entry levels to enter this counter to average in, and do you recommend a hold for, say, for the next 6 months to 1 year?
The stock name is NMDC. Sorry, I'm sorry. So NMDC currently is not looking great. I think it is trading below its important moving average. However, if she is holding for the long term support is placed at 82. So she can continue holding the stock with a stop loss of 82. Below 82, she can consider reducing her position in the stock.
Okay, so that's the technical view coming in on NMDC, but we also have Sonam Srivastava, who has now joined us from Small Case Manager and founder of Right Research. Sonam, morning, Ashesha this side, and thank you for taking your time out and joining us. We have Vijaya Kirti, who is written to us from Chennai, and the NMDC question that we just answered, but we also have George, who has written to us from Kerala, and he's asking whether it is the right time to enter Wipro and ITC. Which is better with a long-term time frame, Ather Energy or Ather Industry? So there are 4 questions that he has asked for. Sonam, first on the IT sector, Wipro, and then ITC, and then we'll talk about the other 2 as well.
Definitely, I think IT sector definitely is at a very interesting space, and you know, I'm sure you must be observing the earnings that are coming out in this particular season. You know, I think we see a transformation happening in the IT sector, but it's not a short-term story. It's like a 1 or 2 year story, right? Where we would see, you know, first the margin compression, and then slowly these IT companies will transform into enterprise AI giants, I'm sure. But yeah, I think we're seeing that happen, and I think right now Wipro, among the whole pack of IT, I think that's been the underperformer. On the other hand, you know, if you're looking at ITC, right? ITC is again, you know, on the consumer goods space, great stock, but we again see that the stock has again seen a lot of margin compression, a lot of correction in the recent times. Between the two, again, it's a very interesting question, but probably, for the slightly longer term, I might go with Wipro.
Okay, so that's the view coming in on Wipro and ITC. But Sonam, another question is on Ather Energy, if you can answer that as well.
Okay. So Ather Energy, I think this is one of the stocks that has seen a very significant run up, right? In the EV space, and I think this is one of the winners in the two-wheeler EV space, and you've seen a significant sort of a run up. I think there are some red flags that I might see on the technical side, especially that this the stock is slightly overbought and I think slightly overheated. But I think if you have a very long-term horizon, I think this seems to be a fundamentally strong number. But yeah, I think we have to be a little bit careful at a 200% or 300% run up in 1 year, right?
All right, let's move on to the next question that's coming in from Praveen Kumar from Bengaluru. What is the right level to enter Hitachi Energy and GE Vernova for the long term? Okay, coming to you, Rupak. He wants to know the entry levels for Hitachi Energy and for GE Vernova. Given that Hitachi is sitting at very expensive valuations, would you recommend an entry at this point or wait for some more correction? What about GE Vernova?
So for Hitachi Energy, I think the more correction might be waiting for the stock. I think the stock has retraced below its important moving average, short-term moving averages, and currently the stock might correct down towards 31,000 in the short term. So I think he should wait for to enter the stock. On the other hand, GE Vernova.
Right.
Yeah. So GE Vernova is also losing its momentum, and I think he should wait for further to enter the stock. I think 4,300 to 4,250 would be a better level to enter the stock.
Okay, so that's the view coming in on GE Vernova, but we also have a viewer who has written to us from US. Gautam Mahuri has written to us from US and he has a question on the pharma sector. Ipca Labs versus Mankind Pharma. Which is the better one for the next 12-month time frame, and he wants both technical as well as a fundamental view on this counter. So Sonam, let me come to you first. Ipca Labs and Mankind Pharma, what will your view be?
See, first of all, I think the pick of the sector is definitely pretty strong. I think we are also seeing allocations start to increase in the pharma sector, and I think it's a defensive sector that is I think that is seeing some momentum pick up. Now, between the two companies, Ipca Labs and Mankind Pharma, I think they are diverse sides of the pharma sector. But between the two, I mean, I might have a preference for Ipca Lab. I can see the stock is strong in terms of growth and quality of earnings, and recently we've been seeing some upgrades happen at a good rate. So between the two, I might prefer Ipca Labs.
Okay, so Ipca Lab, that's the fundamental view coming in. But Rupak, do you have a view on Ipca Labs and Mankind Pharma?
Yeah, if there was only two stock in the pharma space, Ipca Lab and Mankind Pharma, I would pick Ipca Lab because the chart pattern looks better than the other stock. It has given a consolidation breakout on the monthly chart, so Ipca Lab would be a better pick.
Right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll come back and get your questions answered on the other side. Stay tuned. Welcome back. You're tuned into Buy Now, Sell Now. We're talking about the markets and we are in the thick of earnings season. And let's talk about the earnings candidate, Newgen Software, that has reported its quarter 1 results. And a weak quarter 4 is what Newgen is seeing. In fact, if you quickly read the numbers, the PAT is down 41% on a year-on-year basis, and the revenue is also seeing a downtick of 21% on a sequential basis. We also have the margins that are down, 1,793 bips. But let's get the management on board and get some sense of what is going to be the roadmap ahead for the company. Tarun Nandwani is the CEO of Newgen Software, who's now joining us. Hi. Good morning, Mr. Nandwani. Thank you so much for joining us today.
Good morning, and thank you for having me.
Right, Mr. Nandwani, firstly, there is continued strength in the recurring revenues that aided the revenue growth. The recurring revenue remains the key growth driver. Do talk to us about, even the guidance that you have given, some color on that, and can we therefore conclude that the demand pipeline is strong despite the negative impact of the macro uncertainty?
Okay. See, first of all, I'd like to clarify that Newgen business quarter on quarter has a seasonality. Newgen is diversified across different geographies, and the quarter on quarter results we are requesting to see Y on Y. If you see the Y on Y results, there is a healthy growth of 11.2% in our revenues and a good 26% growth in our PAT. The recurring revenues have seen is around 70% of the revenue, and is mostly the mature markets of Americas, Europe, Australia attract the subscription-based pricing, which is the result of recurring revenue along with the other revenue line streams. So we are seeing a healthy demand in these mature markets. Newgen's strategy is focused on customer success and investing in product. So our horizontal and vertical products with their native AI capabilities, the product lines of enterprise content management, enterprise the customer communication management, and the record management, with their AI capabilities and solutions coming from them in knowledge management solutions, in policy binding solutions, in insurance sector, in trade finance and lending and onboarding in the banking sector, has given us good, healthy pipeline for our product lines. In the mature markets, we are seeing pipeline growth for the modernization program and digital transformation programs for a lot of banking, insurance, and green shoots in retail and other verticals also. So, as you rightly said, the subscription revenues are growing, which you see as directly linked to our good healthy pipeline in mature markets.
Correct. So the deal pipeline continues to remain very strong. We get that, yes. Mr. Nandwani. Good morning, Ashesha this side. But one of the concerns for the street has been implementation revenue, because that has disappointed this time around. What is leading to that, and when will the tide turn? When do you expect implementation revenue to rebound? Will it happen in the 3rd or 4th quarter this year itself?
See, the implementation revenues we monitor very aggressively. In fact, the quarter 1 weakness is seen because of some delays in starting of our projects in the EMEA region, which due to some macroeconomics got delayed. But we have analyzed the details, and our pipeline for EMEA and India has also shown strong growth, which is a license-driven market. Therefore, for the implementation also, we are seeing with the project starting, our implementation revenue streams will also start improving Q2 onwards. So we are hoping and optimistic that Q2, Q3 onwards, we will be meeting our targets.
So speaking of the delayed projects, when will the delayed projects start generating revenues? And can you give us a number or quantify how much revenue will be added to the financials in the second half of this year?
See, the drop of 23% is a 12 crore impact. And the projects which got delayed has much more unordered executed book in those contracts, which we have seen the green light to start in the last quarter itself. However, the revenue recognition is related to the milestone billings and stuff like that, and the work that you do. As the projects have started and the deal pipeline and for these two regions is healthy, we are hoping that the implementation revenue stream will come back to the normal growth targets Q2 onwards.
Okay, so implementation revenue is likely to come back to normal targets from the second quarter itself. But let's also talk about margins, Mr. Nandwani, in that case. In first quarter, EBITDA margins came in at 15.7%. And you've also said in your conference call that you're targeting 20% margins for the full year FY27. What will drive this kind of 400 to 400 basis point margin expansion? What will the key levers for margin expansion be?
As I said, our revenues are seasonal. So if you see quarter 1 to quarter 4, our revenue grows, but our cost remains more or less static because cost is taken upfront in terms of increments and stuff like that. So our margins improve, and year on year we are optimistic to meet our targets. This has been the traditional way of how Newgen quarter margins usually move.
Mr. Nandwani, I'm afraid we're completely timed out on the discussion, but thank you so much for joining us and weighing in on the numbers and the roadmap ahead for the company. We'll let you go on that note. But let's go across and take an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.
From major policy decisions and governance reforms to infrastructure expansion, social welfare and citizen-centric initiatives, here's a look at the key developments shaping the Maharashtra's progress in a special Maharashtra 360. Maharashtra has announced a major push towards safer and more efficient transport infrastructure, with CM Fadnavis unveiling the state's vision of making Maharashtra railway crossing free. Addressing a program in Nagpur, the Chief Minister, in the presence of Union Minister Nitin Gadkari, announced the construction of 145 railway overbridges over the next 3 years, while inaugurating 484 crore rupees worth of railway infrastructure projects across the state. The government has approved the construction of 145 railway overbridges as part of its long-term plan to develop the 524 railway crossing structures required across the state of Maharashtra. The projects inaugurated include 3 railway overbridges, 4 subways and 1 road underbridge, completed at a total cost of 484 crore rupees across multiple districts. Most of these works have been executed under 50-50 cost-sharing model between the Ministry of Railways and the Government of Maharashtra. The Chief Minister said that Maharail's adoption of modern engineering practices and innovative construction technologies is helping deliver railway infrastructure with greater speed, quality and efficiency. And the Maharashtra Legislature's monsoon session concluded with a customary tea meeting attended by CM Fadnavis, Deputy CMs Eknath Shinde and Sunetra Ajit Pawar, along with legislators from both houses. Here's a look at some of the session's biggest takeaways. Among the session's key legislative milestones was the unanimous passage of the Maharashtra Women Farmers Empowerment Bill alongside the government's decision to enhance the farm loan waiver limit to 2 lakh rupees. The legislature also approved supplementary demands exceeding 97,000 crore rupees and cleared the formation of a uniform civil code committee. And Maharashtra's push towards inclusive urban development received a major boost in Nagpur as CM Fadnavis laid the foundation stone for the Maharshi Sudarshan Valmiki Colony and the Swapnapurti housing project under Pradhan Mantri Awas Yojana 2.0. Announcing the appointment orders for around 500 personnel would soon be issued, the CM reaffirmed the state government's commitment to the welfare of the sanitation workers alongside affordable housing for economically weaker sections. Union Minister Nitin Gadkari described the initiative as a commendable project that will significantly improve the quality of life of the Valmiki community while also providing permanent homes to hundreds of families. Under the Maharshi Sudarshan Valmiki Colony, the Nagpur Municipal Corporation will construct 392 two-bedroom apartments exclusively for sanitation workers. The Swapnapurti housing project under PMAY Urban 2.0 will add 518 affordable 1 and 2 bedroom homes for economically weaker families, taking the total to 910 new dwelling units. Both the projects are targeted for completion within 3 years and will include modern amenities such as solar power systems, water supply, landscape gardens, playgrounds and security infrastructure, with the Chief Minister directing that construction quality be maintained at the highest standards. And Maharashtra Deputy CM Eknath Shinde has reiterated the Mahayuti government's commitment to building a safe, capable and developed Maharashtra, outlining its priorities during his reply to the final week motion in the Legislative Council. Shinde said that the government is simultaneously strengthening disaster management, infrastructure, citizen welfare and governance reforms while also at the same time accelerating redevelopment and public service delivery. He also highlighted the state's focus on technology-driven administration, women's safety and transparent implementation of development projects across the state of Maharashtra. Shinde said that the government is strengthening disaster preparedness through faster emergency response systems while also at the same time adopting a zero-tolerance approach towards cybercrime, narcotics and crimes against women. Maharashtra Deputy CM Sunetra Pawar visited the landslide-hit Patan village in Pune's Mawal Taluka to meet the Tikon family, which lost 3 members after a rain-triggered hail collapse buried their home near Visapur Fort. Now, expressing condolences, she assured the family of the government support and also announced that 12 lakh rupees at the rate of 4 lakh rupees per deceased had already been credited to the family's bank account, while an additional 1.2 lakh rupees has been sanctioned under the Gharkul housing scheme to help rebuild their house. Pawar also reviewed the situation with district officials and said that the government will ensure comprehensive rehabilitation for the affected family and the surrounding area. And those were all the updates we could pack for you in this edition of Maharashtra 360. Until next week, take care.
Welcome back. You're still tuned into Buy Now, Sell Now on ET Now, and this is a show where we answer all your stock-specific queries. We now have Alka Mehta, who has now joined us on the phone line. Alka, morning. Can you hear us? All right. Alka, can you hear me? Ashesha this side. Okay, I don't think she can hear us. Nonetheless, her question is on Wipro. She has about 100 shares bought at 175. She's asking on what the prospects could be. We just discussed this with Sonam. So, Rupak, let me come to you. What will your view be on Wipro in that case?
So Wipro can be held with a stop loss of 170. Below 170, the stock would lose its momentum and might fall into decline. So currently, hold the stock with a stop loss of 170. If 170 is not broken, then the recovery might take the stock towards 185.
All right. So that's the view coming in on Wipro. But let's move on to the next question that's coming in from Srinivas from Bengaluru. He says he has Newgen Software and he's bought it at 1,150. He's also had Sectoral Technologies at 5,330. Should he hold on to it, average in, or for the next 6 months? Okay, he has a 6-month time horizon. Rupak, I'll come to you then. Newgen Software that he holds at 1,100 rupees, and also Sectoral Technologies that he's bought it at 5,300 rupees. Would you recommend a hold for the next 6 months?
Yeah, Newgen can be held for next 6 months, but with a stop loss, I would recommend a stop loss of 460. The stop loss is steep from the current level, but the stock has recently seemed to be consolidating, but after a rally, it is consolidating. So I think a stop loss can be placed below 460. And till the time it is not falling below 460, the stock has a chance to move towards 640. But to reach his cost price, it will take definitely a much larger time. On the other hand, Silchar. So I'm not getting this. The other stock I'm not getting.
Sectoral Technologies, I think it has undergone some name change, but nonetheless, let's get going then. Jaya Krishna has written to us from Kerala, and she has a question on MTAR Tech. Now, the stock has seen quite a bit of carnage over the last few days. Her purchase price is 7,700 and the stock is currently at 6,050. Her time horizon is 6 months and she is asking whether she should average out at this position or book losses. Sonam, what will your view be on MTAR Technologies?
Before I talk about this, that I am also holding, but I sort of bought it at a much lower price. I think, the stock definitely has gone some correction, and that's because the primary client for them, Bloom Energy in the US, is seeing some correction because of correction in the US AI stocks and the memory chip stocks, right? But I think the stock right now on all the metrics ranks pretty high for us. So we are still very confident about the prospect. And we've seen various buy reports come out about Bloom Energy and MTR Tech. And I think it's a good time, I guess, to average here, right? I won't recommend exiting the stock.
All right, so that's the view coming in on MTAR Tech, but let's move on to the next question. Nidhi Raghav is writing in, she says that she has Tata Elxsi. She has at the entry price of 3,694. Should she hold or should she sell this? She's sitting at a loss. I'll come to you, Sonam. For the next 1 year, what would you recommend for Tata Elxsi now? Given that Tata Elxsi, we saw the numbers also come out, and I mean, it wasn't exactly a rosy picture for Tata Elxsi. In fact, the shares also hit its 52-week low on the weak performance after Q1 results. Would you recommend a hold or should she exit at this point?
See, I think Tata Elxsi, like you said, has seen some correction in the recent times, and yeah, I think the results for IT sector have been less than encouraging. I think especially the mid cap IT names, right, or mid and small cap IT names right now seem slightly more overvalued compared to the larger cap IT names. And what I see is that the larger cap IT names might have more bandwidth to adapt quickly to the changing environment. So, my call would be to reduce some exposure in Tata Elxsi.
Okay, so that's the view coming in on Tata Elxsi, reduce your position. But we also have Murthy, who has written to us from Visakhapatnam, and he has a question on Tata Power. Now, he holds about 250 shares, purchase price stands at 390, and he's asking whether it is a good investment option with a 2 to 3 year time frame. Sonam, let me come back to you in that case. What will your view be on Tata Power?
So I think Tata Power has slightly lagged its peers in the power sector. But again, it's a high quality stock, and especially for the long term, I think they can definitely hold on to this particular stock. What I would also recommend is that they can probably have a look at other stocks in the power segment, which could be better picks here. But yeah, I think on the long term, the quality definitely is great for this particular stock.
Let's move on to the next question coming from Bala from Chennai. He says he has Transrail Lighting. The entry price is 510. Why is the stock going up? In spite of the low valuations, is this question, and despite a strong order book, and why is Transrail Lighting not performing? Okay, he's not given his holding period though. He's sitting at a loss. But Sonam, I'll come to you. If you can shed some light on Transrail Light and what should be the strategy with this one.
So I think on Transrail Lighting, I think the segment definitely is pretty interesting, right? I think electrical equipment, especially for industrial commercial applications, seems to be the right sector to be in. But yes, I think the stock definitely has been getting some downward revisions. It does have some concerns on valuation as well. I think those could be some of the reasons why the stock is undergoing some correction, and I would see that there are other stocks in the same space, right? Electrical equipment, which might actually be doing better. So my recommendation would be to reduce this here and maybe look at some of the peers in this space, right?
Okay, so that's the view coming in on Transrail Lighting. But we have Raja Raman, who has written to us from Chennai, and he has a question on RailTel. Now, he bought at about 343 rupees per share, and he's asking whether he should continue holding on to this position for another 6 months, or add on to this position? So RailTel is the question. Rupak, 6 months is the time horizon. What will the fundamental view be on RailTel at 298 currently?
So technically, the stock looking a bit weak on the daily chart. However, a longer term chart suggests that the stock is trading just above its important moving average. So I would suggest to hold the stock with a stop loss of 290. If 290 is not broken, there is a chance that the stock might recover in the short to medium term. However, if the stock falls below 290, I would recommend reducing the position.
All right, let's move on to the next question. Raja Raman is writing in from Chennai. He says he's bought RailTel Corp at 343. And okay, we've already done this question, so we'll move on to the next one. This is coming from Ganpati from Chennai. He says he has Bharti Hexa. The entry price is 1,833. He wants to know if he should hold on to it. Should he sell or average it? Okay, time horizon is not given, but I'll come to you, Rupak. He wants to know whether what should be his strategy with Bharti Hexa. He's sitting in a loss there. On the charts, what are the technical indicators saying?
So for the last 1 year, the stock has been consolidating with a downwards trend. However, in July, the stock has started recovering and it is giving a good recovery. Already it has moved above its 20 months exponential moving average for the first time in 6 months, in fact in 5 months. So the stock is looking very good, and I think the recovery might continue to take the stock towards 1800. So I would suggest to hold the stock with a stop loss of 1500, and on the higher end the recovery might take the stock towards 1800.
Understood. So that's the view coming in on Bharti Hexacom. But we have Prema Kumar, who has written to us from Kerala, and he has a question on two stocks. One, of course, is Bharat Electronics, or BEL, where he has about 300 shares bought at 401 rupees per share. And he's asking whether he should continue holding on to this position or add to this position. And the other one is 3M India. Now, the viewer has mentioned his time horizon, or rather, he has not mentioned his time horizon. So, Sonam, let me come to you first. From the Defense Pack, view on Bharat Electronics Limited, and the other one is 3M India.
Definitely. I think we've seen some movement happen in the defense pack, but for BEL right now, my view is not that constructive. The stock has seen few downgrades happen in the recent times, and I think the stock seems to be consolidating. On the other hand, for 3M India, I would be much more constructive, and I would recommend that they can hold the position for the longer term.
Okay. So let's move on then to the next question. Meher is writing in from Visakhapatnam. Meher says that she has Shakti Pumps. The entry price is 753. She bought it for 1.5. She bought it 1.5 years ago, and she wants to know if she should average in or exit. What is the alternative stock if I exit to make good my loss? Okay, coming to you, Sonam. Shakti Pumps. She is sitting at a loss here, and she wants to know what is the other name that she can perhaps get into after exiting this. Perhaps where there are more prospects of making good her loss. So what would you recommend?
I think Shakti Pump, like she rightly said, has been going through a period of consolidation, but I think the outlook for this particular stock right now remains constructive, right? It's not like a bad outlook. I don't see any other sort of red flags happening in this particular company also. So I think otherwise, Shakti Pump could be, she could hold on to it to make up for some of her losses. Looking at the same space of industrial stock, specifically in this space, I think something like a Cummins could be an interesting point for her to look at. If she's looking at any other particular sector to invest into at the current moment, like we discussed, we're seeing some recovery happen in the pharma space, and I think some banks are looking good. So those could be some of the sectors that she could allocate to make up for her losses, right?
Okay, so that's the view coming in on a couple of other stocks. But we have Ravi, who has written to us from Delhi, and he has a question on Tata Motors PV. Now, he has about 120 shares bought at 1035, and he says that he holds Tata Motors passenger vehicle and Tata Motors commercial vehicle as well. He's a long-term investor. So, Sonam, what will your view be for both Tata Group companies, Tata Motors Group companies rather, Tata Motors passenger vehicle and Tata Motors commercial vehicle?
Right. So I think across both of these stocks, we've seen some consolidation happen in the recent times. I think I would prefer the CV pack more than the PV pack at the current moment. But yeah, I think for the long term, these are all very good, high quality companies. Just by the virtue of high quality and the recent demand trends, I would prefer Tata Motors CV over the PV right now.
All right, well, that is time for us to slip into a short break. Don't go anywhere after the break. We will continue to take your queries. So write into us and stay tuned. Welcome back. You're tuned into Buy Now, Sell Now, a show that answers all your stock-specific questions. Let's resume with all the queries then. This one is coming from Sampath Malu, who's writing in from Pune. He says he has two stocks, Gabriel India. The entry price is 273. And he wants to know the long-term view, and he also wants to know about rate gain travel. The entry price is 541. He's been holding all these stocks for the last 3 to 4 years. He wants to know if he can hold it on for the next 2 to 3 years. Okay, so he's a long-term investor. Two stocks, rate gain, and the second one is, of course, Gabriel India. Coming to you, Sonam. Gabriel India, what would be your recommendation? Is it a hold? He's sitting at really good profits. Do you recommend partial profit booking here on both the stocks, and perhaps he can hold it on, or is it time to book out entirely?
So I think on Gabriel India, he could book out some of his profits, right? I think they've seen some recent downgrades, but obviously the stock is very high quality for the longer term. So on the other hand, I think I would have a very strong conviction for rate gain, and I won't recommend him to book out the profit just yet. I think it is one of those specialized IT companies in the sector which are still shining through. So I would recommend that he sort of holds on to rate gain.
Hold rating coming in on rate gain, but we also have a couple of other questions then. We have Nishan, who has written to us from Bengaluru, and he has a question on Castrol India. Now, he holds about 1,000 shares bought at 183. The stock currently trades at what? 183 itself, so no major gains or loss at this position. He's asking whether he should continue holding on to this position or book losses, and he has about 1,000 shares of Castrol India. Now, the viewer has not mentioned his time horizon. So, Rupak, let me come to you first. What will your view be on this counter?
So Castrol currently is not showing any kind of trend, whether downtrend or uptrend. It is consolidating, but he should hold the stock with a stop loss of 182, because below 182 the stock move into decline and might fall further. And on the other hand, if the stock does not fall below 182, the stock might recover towards 188. So recovery might be limited, whereas if it falls below 182, the fall might be significant.
All right, let's move on then to the next question. Subramaniam is writing in from Hyderabad. He says he had some shares of Tata Elxsi, and he sold the bonus shares, and he made up his cost. He is now left with 500 shares. Should he continue to hold? We've already spoken about Tata Elxsi, but Rupak, on the charts, let's quickly take a tech check also on Tata Elxsi and see what are the levels to track.
So on chart, Tata Elxsi is looking weak. I think he should hold the stock with a stop loss of 3470. Below 3470, reduce your position.
Okay, so that's the view coming in on Tata Elxsi. Meanwhile, we have Sandeep Anand, who has written to us from Punjab, and he has a question on Share India Security. Now, he holds about 400 shares bought at 185 rupees per share. He is asking for a view. Sonam, what will your fundamental view be if you track this stock, Share India?
I think the capital market theme definitely has been strong in the recent times. This is one of the smaller stocks in this particular space, so I won't have too much of understanding of the particular stock, but I do sort of like the theme at the current level. You're seeing some bounce back in the particular stock in the recent times. So I think it could be interesting hold at this point in time.
Let's move on to the next question. Vijay Raghavan is writing in. He says he has AWL Agri. The entry price is 352 rupees. Should he exit or add more? and buy Bajaj consumers. Okay, coming to you then, Rupak, he wants to exit AWL Agri and he wants to know if he can enter Bajaj consumer instead.
So AWL chart is not looking too good. I think he can exit the stock and put some money into Bajaj Consumer. If I check the chart of Bajaj Consumer, specifically, the stock has corrected significantly, but it is trading around its previous consolidation. So I think he should enter the stock, but he should keep a stop loss below 510. Below 510, he should exit from Bajaj Consumer also.
At 510, you should exit from Bajaj Consumers. That's the technical view coming in on this counter. The stock currently at 531 odd levels. Lalita, meanwhile, has written to us from Chennai, and she has a question on India Cements. She has about 250 shares bought at 289. She's asking whether she should sell this and buy TCS or Coforge for long term. And 1 to 2 years is the time horizon. Sonam, what will your view be? India Cement versus TCS or Coforge from the IT sector?
It's a very interesting comparison, but yeah, I think India Cement. While we are hearing about a potential recovery in the cement pack, we haven't seen anything significant yet. Cement could be interesting if you see demand pickup happen, but I think that's still up in the it's not sure yet. On the other hand, between TCS and Coforge, I think TCS came up with positive sort of commentary. They're seeing a shift happen in the AI space, and their stock is looking interesting. Coforge, on the other hand, has been the winner in the ID pack, but and it has also had a couple of interesting deal wins in the recent times, which has been positive for the particular stock. So it is one of the better performing IT companies, but it's sitting at a significantly higher valuation compared to the large cap IT names. So if she had to choose, I would recommend that maybe TCS could be an interesting pick to have at this current juncture.
All right, let's move on to the next question. Manohar is writing in from Bengaluru. He says he has BSC. The entry price is 4,195. The time horizon is 3 years. He's sitting at a loss right now, and he wants to know, about the forthcoming NSE IPO that is likely to affect, BSC in the short or the medium term. Please advise what should he do. Sonam, coming to you. He's been sitting at a loss with BSC, and he is skeptical about the NSE IPO and the kind of impact it might have on BSC. What should be his strategy?
I think BSE right now, I think the outlook definitely is pretty positive, and the stock is sitting at a significant consolidation. I think it's been a matter of almost 2 months of consolidation, which gives her confidence of some short-term bounce back coming in, and the long-term outlook definitely remains strong for this particular stock. So I would recommend that they stick in, and I don't really see that the NIC IPO could derail BSE in any way. I think that could in fact be positive for the sector itself. So I wouldn't recommend that he sort of exits the stock at the current level.
Okay, don't exit the stock at the current level. That's the answer to your question. Meanwhile, we have Kanan, who has written to us from Kerala, and the viewer has a question on HDFC Bank. 400 is the quantity that the viewer is holding, 843 is the purchase price, and the viewer is looking for both the technical as well as fundamental view on this counter. Rupak, let me come to you first. Technically speaking, what will your view be on HDFC Bank?
Technically, the stock is looking very good for a decent recovery from the current level. Stock has been consolidating for the last few days, but then today it is showing a sign of getting into momentum. So hold the stock with a stop loss of 770, and on the higher end, I expect a decent recovery towards 900.
Okay, so that's the technical view coming in. But Sonam, if you can share your fundamental thoughts on HDFC Bank after the kind of operational updates that it reported over the last 10 days?
I think HDFC Bank on the fundamental side also seems pretty positive, and like we discussed, that momentum is building up in this particular stock. I think there's been a lot of upgrades that have been happening in the banking sector. I think there's been some concerns about the NIM compression and the margin pressure, but the RBI regulation around the NRI banking side could have a positive impact. I think the rate cuts have been delayed. There could be a discussion of rate hike, which would be positive for the banking pack, and we're seeing sector rotation happen toward the banking names as well. HDFC is a great stock in that space, and I think definitely it's looking positive and could see a pickup.
Okay, so that's the view coming in on HDFC Bank, both fundamental as well as technical. But Sonam and Rupak, thank you for taking your time out and joining us here on ET Now and addressing all our viewer queries. But that's all the time we have on this edition of the show. But don't go anywhere. More news and updates will continue on the other side. Stay tuned.